This is the Fixer Punk Podcast, the podcast that will probably never claim all of its birthday freebies from all of the random stores and restaurants that email them to us. I'm Grayson Peltier. So today I want to talk about an issue that is vitally important to the strength of progressive movements, but is also something that is very much weaponized by conservatives against just about all of us. And that is finances. And it's come up a bit in the news in a few different ways. There was a How Money Works video, I haven't seen it yet, that is discussing the topic of personal finance and the poor shaming that is rampant in that space. And I've mentioned it a decent amount with Dave Ramsey and some of these other finance supposed experts on the internet. But then also with the recession, which there's now some doubts about whether or not there's actually going to be a recession. But what I can tell you is that there is a lot of economic impacts and changes going around that are specifically really getting at the average person and the working class, and more specifically like the more surplus aspects of the working class, because the Fed just raised interest rates again because they're saying that inflation is not coming down as quickly as they want to, which interest rates aren't going to fix that. We've already explained this is due to an increase in corporate profits. Corporate profits are the biggest share of inflation in recent times. And what we're also hearing from some economists is that there really isn't a recession predicted anymore. But that doesn't mean that you and I are out of the woods necessarily. In fact, what I've been seeing, these little indicators, are that people in especially the lower working classes and people that are maybe considered to be sort of surplus labor to the system, people who aren't like the most valued workers in the system, for lack of better terms, are getting screwed. Like, you're seeing a lot of controversy over DoorDash lowering their minimum pay down to $4. You're seeing, or actually not DoorDash, that was Instacart, I believe. But you're seeing some controversies around Instacart and DoorDash not having enough, not paying enough right now, and there not being enough orders. And that's because families are getting hit by higher costs and those order volumes are going down. But also it's because these companies, these tech companies in particular, have been running without profit, and they're doing this basically just to draw in profit. They're cutting the workers. They're, of course, just as any other capitalist enterprise would do, they are cutting back on workers to try to recoup their profits. And it's this economic police state that's going on. And if we don't fall into a true recession, it's because the economic police state, which I explained in another prior episode, will have actually succeeded and have taken enough little bit by bit from workers and consumers to be able to prevent the rich from falling into a true recession. So there's still economic pressures going on. And one of the things that is really being threatened by the economic pressures that are going on, even if they're not a recession, is progressive movements, labor movements. Good news is I am very happy that striking is still continuing. UPS workers got a deal. SAG-AFTRA and the Writers Guild are still on strike in Hollywood. They're still going strong. There are a lot of strikes that are still going strong, and that is a great sign. However, what is not such a great sign in terms of progressive movements heading into the 2024 election is the donation numbers. We're seeing actually overall, the good news is it seems to be on both sides, on both the left and the right, because Ron DeSantis has had some campaign staffers laid off. But there's a drop, according to Politico, there's been a drop in small dollar donations both on the Democratic side and on the Republican side, which, of course, small dollar donations give the people more voice in the process. But there's also been a drop in larger dollar donations as well because of the way the markets have been going, the chaotic stuff with banks failing. Those things have been affecting the rich, and the rich are going to, of course, they're not going to cut out like the worst parts of their oppressive regime. They're going to cut out the little concessions that they're giving in terms of charitable and philanthropic donations and donations to progressive causes. money that's being given to diversity, equity, and inclusion initiatives, things like that. That's what they're going to cut back on. So you're seeing in the nonprofit space, which is where a lot of the progressive money that comes in from like corporate sources goes into like 501c3 type organizations. So you're seeing, and I got this email from an organization called Blue Tent that says the Sierra Club is downsizing to the tune of 100 people. Planned Parenthood laying off 100 staff members. Color of Change laying off 49 people. Act Blue, which processes the campaign donations for the Democratic side, laid off 17% of its staff in April. So what's going on here is we're seeing a decrease in donations, and that can be one of multiple factors, one of which is that there may be fatigue with those ridiculous, extreme sense of urgency, which me as a communication consultant, this is a big pet peeve of mine, like the extreme sense of urgency and almost deceptive nature of like the political campaign texts and emails and stuff like that. But there are, of course, economic pressures going on as well. Politico interestingly reported that the largest occupational group of people who are donating to political campaigns is retired people who are likely to be impacted by increased prices. But what I want to talk about today is how our individual finances and how protecting our finances is extremely important to ensuring the victory of progressive and leftist movements, because we're seeing right now that the money is starting to not flow as much. There was a huge surge through the COVID pandemic in small dollar donations, and it's dying down quite a bit. Now, there is some speculation also, another factor in this is sort of the urgency of politics, is that things aren't as urgent anymore, it seems to some people, with, I guess, the indictments of Trump and some of the things that have happened that having Trump not be as much in the forefront, him being long out of office, even though he's running again, even though he still poses a threat, even though we still have a Republican majority in the House, for some reason people seem to feel like politics is less urgent. There's less of a crisis of democracy. Meanwhile, we all know, seeing the types of bills that have been running through Congress, especially what happened with the debt ceiling, there is definitely urgency, and there is urgency to actually do the things that need to be done to protect workers and protect normal people from economic harms that are still coming, in spite of the fact that we have a Democrat in office in the presidency. So what this goes back to is that the financial health of the members of a movement is, in fact, the strength of the movement. I remember when I was working on the conservative side, you listen to conservative talk radio, and there isn't really such a media ecosystem on the right. I have spoken ad nauseum about this. But there are constant advertisements for a lot of different kinds of products. There are a lot of small business owners who would advertise on the conservative talk radio stations. Maybe they were losing business from the big consumer packaged goods brands, which again, if you're relying on really big companies, charity and philanthropy and donations, then your movement is going to get wiped out when the economy starts to get a little bad. If you're relying on some big corporation's commitment around Black Lives Matter, which is what I've seen a lot in like minority entrepreneurship spaces, things like that, racial justice, social justice, they're relying on the money from corporate DEI, diversity, equity, and inclusion initiatives, and that's not sustainable. Because that money, as soon as economic headwinds come, they're going to cut that. That's the first kind of stuff that throwing you a bone is going to be the first thing that gets cut. And I've discussed this before. But on the conservative side, there is a base of donors who have smaller businesses, small to medium businesses, that are buying advertising on conservative talk radio. They're willing to donate to conservative causes, that stays around, that's always around, and they don't just come during election cycles. They are constantly, maybe they're even going, like when the Tea Party was around, when I was part of the Tea Party, they'd be at meetings and things like that. I remember a car dealership let the Tea Party use their parking lot as a venue for a Tea Party event. So that's the kind of like stalwart support that the left really doesn't have. And of course, also like having the financial flexibility to be able to maybe when you get that text message, be able to chip in a little bit to campaigns. And then, of course, the positive of just being able to, because part of obviously the goal of leftist and progressive politics is to help people, to help the working class be able to survive and thrive. So there is knowledge and there are ideas and there are things that we should promote that don't feed into that capitalist narrative necessarily, but let you survive it so that we can help the people that we actually intend to help through our policies. Help them materially now and then help them in the future through policies. So I think that we need to, at this point, embrace that it is important to have wealth in some ways in order to create change. But we have to reject this toxic victim-blaming attitude which pervades the finance space, which, of course, conservative talk radio has had Dave Ramsey forever. And you have guys like Dave Ramsey and a lot of what they do, even like the newer guys on just social media and the internet, like the Caleb Hammers of the world. They're basically just victim-blaming and shaming people, and they're working, in my opinion, for the low-wage, capitalist, exploitative, industrial complex. And we need to show an alternative, just like we want to show an alternative when I discussed the topic of fitness last week. We need to show an alternative to the victim-blaming narrative of finance where people can still be helped and even helped better, but not with all of this nonsense behind it and intolerant ideologies, in this case, poor shaming, classist ideologies. So what you'll usually hear, like if you listen to Dave Ramsey or these types of conservative talk radio types, or even like the influencers on social media, they're like, even if you read like especially and the like headlines of like a Caleb Hammer, they will emphasize like working harder, like this person won't get a job, this person won't do more jobs. And they teach that being in a job is akin to holiness. And being in a job and making money is akin to holiness. Second Thought had a video that I did see that was talking about this is the reason why you're poor. I think I'll link that in the description. But he does link it back to the Protestant work ethic and certain conceptualizations of Christianity, which is pretty interesting stuff. But more on topic here, they always want to push jobs and getting an extra job. Going and becoming a pizza delivery driver was Dave Ramsey's big example. Going and getting a fast food job, like Caleb Hammer was talking to a guy who had a background in IT, but he did some things wrong in his life. He was just always like, just go get yourself into a fast food job. They want to push you into these jobs, and they want you to believe that you have to pay off all of your debt 100% with no help, no assistance. Don't even think about unionizing. That word shouldn't even be in your brain. That kind of stuff. And they ignore the fact that the real cause of most financial problems is bad jobs, worse bosses, and rampant financial exploitation. And it's not because of a lack of personal responsibility. Now, personal responsibility is still important. But the thing is that I honestly believe that most people do pretty well with personal responsibility around their finances, and especially people that are poor, because they have to. You have to in order to survive. But even when it comes to like more flexible work arrangements, unfortunately, the victim blaming, the stuff I explained in the economic police state episode, it's people are continuing to do it to each other. Like in that DoorDash subreddit, people are like saying, well, it's your fault for not getting a regular W-2 job. And then people bring up, well, I have a chronic health condition where there are some days where I may not be able to report to work. So like having a schedule and having a boss that tells me when I have to come into work is not a problem. But if I can just turn on the DoorDash app and deliver when I want to, shut it off when I want to, I can do that job and I can make money and I can survive. And disability benefits don't nearly pay you enough to survive. There are people on the streets homeless who are getting SSI disability benefits. So those are wildly inadequate. And besides, if you're a conservative, isn't your whole thing to get people off of benefits? But I digress. people are blaming each other for not falling into the perfect model of going to a job. And even when you are doing a job, but it's not like a job that they respect, like somebody has to still deliver your food. You don't get to just wave away the fact that the person who delivers your food needs to have a place to live. There's this like meme going around. I think it's from a tweet actually. And that tweet it basically says, well, you want people to make cheeseburgers. Actually, it's from a guy, J.K. Sunjata. Y'all want a cheeseburger, but y'all don't want MFs who prepare it to pay their rent. How does that work? Exactly. It still doesn't take away the fact that those people need to survive and that people need flexible work arrangements. And the system doesn't want you to rely on anything that doesn't have you under the thumb of a tyrannical tyrant boss who controls all of your time and controls your entire life. So anything that provides independence, entrepreneurship, whatever, they're going to fight against that. But you're not without defense against it. Of course, we make systematic defenses. But we want to be in a position where we can resist when we're pushed into the crappy job market, and we can fight for better conditions with flexible work for those who need it. So the first way to do this, the first practical step here is to analyze your finances the way that the rich people do or the businesses do. Typically, like if you go through like that Caleb Hammer financial audit thing, he'll like go through individual line items and like chastise you for gas station taquitos is one of the examples. One of the most notorious examples of the stuff that he does. But he goes through and chastises individual line items. That's not how you do it. What you do, and he probably does this, I haven't actually gone through one of his videos. The thing is that a lot of this stuff is very emotionally triggering to me. In fact, doing this episode was very emotionally triggering to me. But this is a common pattern that I have seen. In fact, I did an interview on Street Fight Radio back when that was going. I was a call-in on Street Fight Radio back when that was on the air, and I discussed how I was trying to use neurofeedback to like desensitize myself to the anger I'd get from watching Dave Ramsey. Again, beside the point. But you want to analyze it in the way that a business would. So typically in accounting, and I have a little bit of accounting training, I'm not a financial expert, this is not financial advice, but you look at your assets, income, and cash flow. You have a balance sheet, which is assets. You have income statement or profit and loss statement, depending on which school of accounting. And then you have a statement of cash flows. So to me, the most important thing to look at is how cash is flowing. Are you bringing in more money in a month than you are sending out? And if that's positive, then that's a good thing. And then how do you use that money? Do you save it? Do you invest it? So then you look at your assets. What's deficient? Do you have enough money in an emergency fund? I'm not going to get into a lot of particulars here. Some people say Dave Ramsey will tell you $1,000. I started out with $1,000, to be honest. That was because my expenses were pretty minimal after graduating college, and I was trying to pay down credit card debt, which thankfully I did. Right now, I just have a little bit that's on 0%, but I have a little trick where I hold the money in a CD. I make the money off the CD, then I pay it off with the money from that, and I make myself a little bit of interest. That's more of an advanced tactic, though. I don't expect you to be able to do that initially. You probably won't have the self-control to do it initially. But you want to look at your assets, your cash flow, and your income. And you want to see whether or not that's positive or negative. And you want to see your assets, the amount of money you owe on things versus like what you own. Like things you own, like a house, car, savings account, investment account, retirement account, bank accounts in general, versus how much you owe, like on loans, credit cards, medical bills, all of the liabilities of like money that you owe other people. And then your income, of course, you want to see, like, if you're running a business, then you have a separate, like, you have profit and loss and those types of things. But I also encourage workers to consider how much their job is costing them, how much your job is costing you in terms of commuting, in terms of having to get lunch. If you can mitigate that, then do that. But having to spend money on certain things for work, continuing education, having to get special clothes for meetings, like nice fancy clothing for meetings and stuff like that. What is your job costing you there? So you actually get an idea of what your income is, and the expenses that you're putting out as well. And also another important metric is your credit score. Dave Ramsey and the like will say, well, you don't need a credit score. Credit score is an I love debt score. But the thing is that your employer, the big Fortune 500 publicly traded companies, and probably the people around you who are more successful than you also love debt. Now, I'm not saying that you should automatically be inclined to take out debt. Some people don't have the discipline for it. It's a matter of your own personality. Of course, with all things and every recommendation I give, it's about your personality, your situation. Get advice for your situation and get advice that respects your native knowledge as well. But credit scores are important because that's going to determine whether or not you can rent certain apartments, get insurance rates, things like that. And most importantly, the one type of investment that is building most of the wealth of like bringing people from lower classes or lower middle class into upper middle class is homeownership. And as a real estate agent, I am very passionate about that. And it is much easier to get a good, high quality mortgage loan at a lower interest rate without having to do FHA or something like that if you have a good credit score. So keep your credit score as another metric. And of course, you do want to pay down debts as long as you feel secure enough. And my metric in terms of emergency funds is to be able to, if you needed to leave your job tomorrow, could you do it? So that's a personal individual analysis based on your own expenses. If you needed to leave your job tomorrow, could you do it? And would you be okay for a considerable amount of time, whatever amount of time? 3 to 6 months is general rule, but it depends on you, your personality, who you are. If you're somebody who's prone to burnout, that may be more. You may need a much larger emergency fund if you are prone to things like autistic burnout, have mental health issues, have other expenses. But that's what you want to be at. Maybe you have, and this is kind of an interesting plan. I'm about to learn how to drive and get a driver's license. One of the things I want to do is get a car that's easy enough for me to live out of so that I always have a backup plan. I always have a way I can just live in the car if I don't, if I can't afford really expensive rent in whatever city that my employment would take me to. And that's one of the crappy things about the whole return to office thing is you could live on a lot less. And I think that employers know that. I think that employers know that if you have to spend $4,000 a month on rent in the city versus living maybe in a paid off house or a house you only have like a $1,500 a month mortgage on out in the country or in a rural area, you're going to be more tied and more dependent on that employer. There's actually a funny comment on my TikTok and there was another TikTok that was saying, well, this guy's boss said that you're going to need me a lot. You're going to need to stay in this job because you owe all your money on this car payment, boat payment, whatever, all this unnecessary debt. So that's another thing with debt is you want to not have so much debt that you can't leave a bad employment situation or you can't go on strike. Because if you're in an employment situation where you're living paycheck to paycheck, and you have no real way of supporting yourself, and you don't have yet an established union with a strike fund, you'd be less likely to go on strike. You'd be less likely to vote yes on a strike, and that can be an impediment to labor organizing. So you want to keep that in mind in terms of debt. You don't want to be in so much debt that, again, it's impeding your cash flow. Because if you have, let's say, you have a debt of like $100,000 and you're only paying $10 a month on it, there's like this cash flow index. I think it's the amount that you the amount that you owe divided by the amount of the payment, and you can tell which ones are impinging on your cash flow more by making that formula. So if you have a debt that is a higher cash flow index debt, and I'll put the correct formula in the description, then those are the ones you want to pay off. The ones that are more likely to impact your cash flow, the ones that are more likely to cause you a problem, when you have to leave a job. And that's one of the other things is like student loans. If you know that you're going to need to be out of a job soon or not stay in a job, when your income goes down, if you have federal student loans that are eligible for like the income-based repayment, the SAVE plan, you can bring those down to a $0 payment by writing in and saying, look, I'm unemployed now. So my income is zero. So you get the income-based repayment plan down to $0 a month. So also, again, like I feel like the people that'll tell you, oh yes, you have to use every single last red cent of your money to pay off your student loans right away, are also sort of harming you because it keeps you strapped down to that job and thinking and not taking that money and putting it in savings. Because if you can just put the loans basically on pause and still have it count toward your forgiveness later on, if you're doing the 20-year thing with the income-driven repayment plans, then it doesn't really behoove you to pay off your student loans entirely and worry so much about that. You should probably pay them off because you want to have more of your income over the long term. But if you have that kind of situation, you shouldn't be cramming to make double, triple payments on your student loans if you know that in a couple months you're getting out of that job. Just put that money in savings instead. But of course, always keep up your credit score. Don't default on things unless you have to. And this episode's not really going to cover like defaulting on debt, but suffice to say that if you are in so much debt that you're missing payments, that you've already had 30, 60, 90-day late payments on your credit report, you have a charge off or two on your credit report, it might be better for you to try to let that debt ride out and settle it later on for less money, for a percentage of what you owe if you really can't pay it, and to save that money away to be able to offer a lump sum settlement to the creditor if your credit is already completely trashed. But that's a whole different episode. And of course, the Dave Ramsey folks discouraging bankruptcy, even though Dave himself filed bankruptcy. Bankruptcy can be an amazing thing for people. I think we need to expand bankruptcy rights, especially for student loans and for those types of debts, because bankruptcy, it's in the Constitution and it can be a really life-changing process for the right person. But that's outside of the scope of this. And again, you don't want to overstress yourself with the little things. If there's a little thing that makes your life a little bit more pleasurable and you can afford it, that could be worth your money. And you don't have to necessarily just cut out every single last thing that makes your life enjoyable. Just like the whole dieting and fitness thing. The only way I was able to get through it, because back in the day, back when I was like first getting into fitness when I was a young kid, there were all these like super strict, like clean eating type diets, and you had to follow all those types of regimented things. Then, of course, you have the Lane Nortons of the world who came in with if it fits your macros. So, like, for me, I see money kind of like that. If it fits your budget and you're still getting a positive cash flow and you're getting to your goals in a pace that you want to get to them, then it's fine. I don't know if I'd recommend, like that guy on Caleb Hammer, gas station taquitos. But I had a meal at Del Taco a couple days ago. I'm not worried about that. If you are in a place in your life where you have to worry about it, then yeah, worry about it a little bit, but don't worry about it that much. What you want to do is you want to think about the big things first. You want to think about your housing. You want to think about your cars, large purchases, student loans, those types of things. And especially you want to think about the ways that the economic system takes from you. And those are going to be things like bank fees, insurance costs, subscriptions, excessive interest charges, all kinds of like little service fees, little charges, this and that, your cable bill, you're overcharged on a cable or phone bill. And this is also kind of situational. I do have a bit more of an expensive phone plan, but that's because I use it for business purposes. So again, all individualized. But yeah, overcharges, all those kinds of little things, all the little ways they take from you. Because first thing, if you are at a bank that charges you a monthly service fee, or if you're using a prepaid debit card that charges you a monthly service fee to hold your money, you need to consider switching. And this is also a way to be more impactful with your money too. One of the first like pieces of progressive media that I got into was a film called Claim Your Change by a guy named Kyle Tierman, a pro surfer who is a climate activist. And he's talking about how big banks invest in fossil fuels and other things that aren't very environmentally friendly. But your local banks, your local credit unions are very important to like your financial ecosystem of your community and lending to small businesses. So you want to look into a local credit union. There are also some larger national online credit unions too. Open an account at a credit union. If you're being charged fees on your banking, then you need to look into that. If you're being charged an annual fee on a credit card, you need to see whether or not that's actually worth it for you. Are you getting what you want from it? Insurance. Look to see if you're being overcharged on your insurance. Chances are right now you're probably not, because the insurance market has been crazy. So you may not want to switch, but in certain cases you may be wildly overcharged for insurance. So you may want to shop around and see if you have like all the correct discounts. Subscriptions, like every single, like one of the biggest traps of like capitalism lately has been like these subscriptions. So like, oh yes, this is free for 30 days. Click this one button right here. We'll take your Apple Pay right away. And then 31 days come, you notice there's a charge on your credit card. You're like Uber One, that happened to me. Different like subscriptions for news websites like New York Times or whatever. Obviously, if you use journalism, support it. If there's stuff that you like that you know you want to support, then support it. But be intentional about it. You signed up for some random app in the App Store. Go through your subscriptions in your App Store. Make sure that those are all things that you legitimately want to pay for. There's an app called Rocket Money. No, this podcast is not sponsored by Rocket Money, but hey, if anybody from Rocket Money is listening, reach out to me, Grayson@offspeedsolutions.com, or leave a message at 844-477-7865, 844-477-PUNK. Use an app like that automatically tracks your subscriptions. You can also call in, negotiate some of these things. Sometimes you can just do it over a live chat. You can get oftentimes significant discounts just by going on the live chat option on some of these customer service things. New York Times canceled my subscription a lot easier than I thought it would be. So sometimes it's not as hard as you think, but these are all the little ways that they take little bits of money from you. So you want to mitigate those types of things. All kinds of random overcharges like that. And interest as well. The Dave Ramsey types of the world will tell you, no, you just don't refinance, don't consolidate, don't do any of that. I disagree. If you have a credit card right now that's at 29% interest, don't try to straight up pay off that card. If your credit score is above about 680 to 720, if you may be able to get a zero interest balance transfer credit card, take advantage of that. That's how I got myself out of credit card debt. I first started out with that whole debt snowball thing because I was into Dave Ramsey back then. But what really helped me was putting the credit card onto a zero interest card and paying that down. Pay off your cards at zero interest so you're not giving away $20, $30, $40 a month to the bank. So cut out the ways, before you start cutting back on stuff for yourself, cut out the ways that they're taking money from you. All of those random little things. And of course, like in your everyday life, if there's like random purchases or things like that that are not really giving you that joy or giving you that enjoyment, but you're just doing them out of some sort of social pressure, those are the things you want to cut back on. Oftentimes, like people will feel pressured to buy like status symbol cars and stuff like that. And it's of course the big stuff. Again, focus on the big stuff. Don't like go out and buy like status symbol cars and stuff like that if you can't afford it. Don't feel so pressured to do all of those things. Do what you enjoy rather than what society pressures you into believing that you should enjoy. But yeah, still do the things that you really like and make your use of your money meaningful. And I mentioned Rocket Money for subscriptions and for tracking those, but it's also a pretty decent budgeting app that'll help you see where that money is going to, where it's coming out of randomly. But now on the income side, you want to get free money as well. There's money that's laying around in various places that the system would rather you not know about in a way. Moving your money to a local credit union can get you a higher interest rate on savings. There are lots of high interest rate right now. Take advantage. If you have savings, take advantage of the high interest rate climate. Put your money into a high yield savings account. And if you're not going to use the money for 5, 7, 12, 24, 36 months, put it into a CD, and that'll keep you from spending it. It'll keep it separated, keep it socked away, and in a different bank, possibly keep it in a different bank than your main savings account or your main checking account, so that it's not easy to tap that money. Make it harder for yourself behaviorally to be able to reach that money. So take that and put it into a high yield savings account. Right now, you should be aiming for 5% or a little bit below that. Local banks, credit unions. Also, if you want to try a local bank in another state, that's totally fine too. You're supporting that community through your money as well. There's a website called Raisin. I haven't tried it yet. That has a lot of like local banks that offer high yields on savings accounts and CDs. Keep that separated from your main money. Keep a CD. Keep CDs so that money is locked away, because there is a early withdrawal penalty for those, but they carry a high interest and that's locked in. And with a high yield savings account, they can start out with 5%, but the next month it could go down if the Fed lowers interest rates. And keep in mind that there are short duration CDs. So the rule used to be that you would put in a longer duration and you get a higher interest rate. Now, shorter durations, because the interest rates are going to come down at some point in the next few years, of course. But those shorter duration CDs are things you want to consider. So that's giving yourself free money with interest and protecting yourself from overspending. And then if you have a good credit score, if your credit score is, I'd say, above 700, 720, you can sign up for credit cards. You can get a sign-up bonus on credit cards. They can give you $100, $200 in cash for spending using that credit card. So that's easy money in your pocket. And take that money, all these little bits of money, you want to set them aside into a separate place. Separate bank account, separate bank or credit union, away from your regular money. Keep that money, like if you get these little bits of extra money, just put them aside in a place where you don't see them and let it grow and let it become your emergency fund. Or let it become your spending money if you already have, for something really nice in the future, if you already have an emergency fund. But you have cash back on credit cards as well. So if you're spending money, if your credit is relatively decent, again, I'd say 680 or so, you can probably qualify for a cashback credit card. And that'll give you anywhere between like 1% to 2% on your spending. So you take that money, and what you want to do with these credit cards is you want to pay off the credit card at least once a week, so it comes out cash money from your account, so you don't build up a balance. Maybe even log into you pay, you leave a store where you're done with your shopping for the day. If everything's cleared, send a payment out right away if you can. Some cards have limitations. You can only do it once every 3 days, but send the payment out right away so it's automatically out of your checking account like it's a debit card. That also credit cards provide you more liability protection than debit cards, because inherently the thieves can't tap in. Even if the money is replaced in the end, they can't keep you out of money by taking all the money that's in your bank account. So that's another advantage of credit cards. So use cashback credit cards and get sign-up bonuses for signing up for credit cards. Again, be mindful of annual fees. Anything with an annual fee is probably something that you shouldn't get unless you are a big travel spender, or you basically if you travel a lot. That's when the annual fee credit cards become a good thing. But you take that money, put it away, separate bank account, away from yourself, so that money is there separate and growing into your high yield savings accounts. Another one is class action lawsuit settlement checks. Like there's one going on, actually a couple for Facebook, one for Google. There's one for like hand sanitizers. There's a good website called classaction.org that lists them. These are lawsuits usually against big companies that have done something wrong, and they're being forced to pay back money to the people for the things that they've done wrong. So you don't want to leave that money unclaimed, because oftentimes if you don't claim it, it just goes back to the company that did it wrong. So they are not getting adequately punished for their bad behavior. So you can help be a part of it. Claim the money if you legitimately are entitled to a class action settlement. Read the terms and conditions of it. Claim that money, take it, put it away in that separate account. Some of them can be really high. Like I even saw a DirecTV one, those like $400 just if you were getting telemarketing calls from a certain DirecTV dealer in certain states. Take that money, set it aside, put it away from your normal bank account. And automate things. Make it so that savings just happens automatically. Like a lot of your bills probably just come out automatically from your bank account. Your savings and how you're paying yourself should too. Start with a little bit, but each time your paycheck comes in, just let the money go into an account automatically, into a high yield account or into your retirement account if your savings account is already filled up. But last and most importantly is consider collective action. If the income and you not making enough money and not getting enough of the surplus value that's taken out of you as a worker is the number one reason. These are little tips and tricks to keep yourself financially stronger, but collective action is what gets the goods. Now that you're financially strong enough as an individual, maybe you can consider organizing your workplace, consider taking a few risks, maybe start that business that has a socially responsible goal, maybe start that worker co-op. If you're financially secure, you're doing well now, and you can do that. And that is the major factor in all of this, is the way that the system takes from you. It's not, you deserve to live a good life. Don't blame yourself for things. And know that investing in others is still important. There's even been criticism of family members keeping their kids at home because that means that they're not investing as much in retirement. But know that your values are your values, and use finance in a way that does that. And don't let that victim blaming seep in, and know that you can become a better person. And as you're becoming a better person as an individual, that just means you have more strength, more power, more ability to help others. It doesn't mean that you're better than somebody else, and it doesn't mean that the problem no longer exists just because you have managed to improve your own situation. Use that to lend a helping hand to others. Know that that makes you strong enough to engage in labor actions, to engage in progressive political actions, to give some more money to campaigns, to maybe take some time off and be involved in volunteering for campaigns, mutual aid, all those kinds of efforts. And there's a lot more to go into in this topic, socially responsible investing, all that kind of stuff that I would need another episode to talk about, but our time's running out here. So I just wanted to thank you so much for taking the time and spending some time with me today. Please follow on the social media. There will always be more on the TikTok at FixerPunk, Instagram at FixerPunk, Twitter at Grayson Nation, GreysonNation. If you are an entrepreneur or you're a leader of a political or nonprofit or advocacy organization, please reach out to me. I can help you with getting your messaging, getting your marketing, your communications efforts, even with less money, even in this climate with less money coming in. Find more effective ways to authentically communicate, connect, build that audience, and even ways to get donations, ways to send donations and fundraising communication out that are not going to piss people off, but still motivate them to act and support your cause. That's at offspeedsolutions.com. My email is Grayson, Greyson, at offspeedsolutions.com. If you have any questions about this episode, you have anything you want to rant about, bad experiences with finances, anything like that, anything at all that you want me to cover on the show, give me a call. Call in, leave a message anytime, 844-477-PUNK, 844-477-7865. Again, thank you so much for taking the time to listen today.